Happy Tuesday, everybody. Welcome to another episode of Market Update, where we discuss leading financial and economic developments in Asia, Europe, and North America. My name is Tony. We have another big report to go through today. Let's jump in. Global financial markets are caught in a whirlwind of uncertainty as US President Donald Trump intensifies his trade war with China, unleashing shockwaves that have sent stocks, bonds, and commodities into violent gyrations for a third consecutive day. Trump's renewed threats of additional tariffs, a staggering 50% on top of existing duties for the Chinese, bringing the rate up to an incredible 120%, have rattled investor confidence, raising the spectre of a recession and putting central banks and world leaders on edge. The latest turmoil began as global markets opened this week to bleak sentiment following the sharp escalation in tariffs between the United States and China, on top of the uncertainty from the Liberation Day tariffs, a move which the US president argues is designed to reset the global trade order so it is more beneficial and less disadvantageous, he argues, to the United States. Roughly $10 trillion in equity value has been wiped out across global stock exchanges since those tariff announcements, and the trend shows little sign of reversing. On Monday, the S&P 500, America's flagship equity index, plunged at the opening bell before staging a brief rebound on rumors that the White House might pause the tariffs. However, these hopes evaporated by late morning U.S. time as Trump took to Truth Social to reassert his hardline stance, vowing that unless China rolls back its retaliatory tariffs by the 8th of April, today, the United States will impose the additional 50% levy starting the next day. Quote, if China does not withdraw its 34% increase above their already long-term trading abuses by tomorrow, the United States will impose additional tariffs on China of 50%, effective the 9th of April, end quote. Markets were left reeling. The S&P 500 closed down 0.2%, the Nasdaq eked out a modest 0.1% gain, but the volatility was jarring. The VIX, Wall Street's fear gauge, spiked above 60, its highest level since the August 2024 market correction. Apple, whose supply chain is deeply embedded in China, saw its shares drop 3.7%. This is already after several days of devastation on the stock markets, of course. Bond markets, typically a refuge during periods of turmoil, offered little comfort. The yield on the benchmark 10-year US Treasury jumped by 0.2% to 4.19%, the largest one-day increase in 3 years, signaling a major shift in investor sentiment. The sell-off in longer-dated treasuries, which are sensitive to inflation and growth expectations, underscores the growing concern that tariffs could not only derail the US recovery, but also worsen government finances. According to traders, part of the bond sell-off was driven by a dash for cash, where funds are forced to liquidate assets to cover margin calls or close positions. The shock rippled across asset classes, suggesting a systemic risk event may be unfolding. Quote, this is madness, end quote, one veteran floor trader exclaimed, reports UK-based The Financial Times, summarizing the day's chaotic trading. Amid the financial carnage, the White House remains firm. On Monday, Trump defended the tariffs as necessary medicine to fix what he calls chronic trade abuses by China and other nations. Quote, I don't want anything to go down, but sometimes you have to take medicine to fix something. End quote. He insisted that many countries are reaching out to negotiate and that the US is in talks with as many as 50 nations, though a senior official clarified that negotiation may be too strong a word at this point. China, for its part, has hit back hard, saying that it will, quote, fight to the end, end quote, and that it has no intention to backtrack on its 34% tariff announcement. According to Corey Combs of the Beijing-based consultancy Trivium China, quote, Beijing has strategically left itself space to continue ratcheting up retaliation, end quote, suggesting that further escalation is very much on the table. We explore this in much more detail in today's episode of China Update, which goes live 1 hour after Market Update. Meanwhile, the corporate world is increasingly alarmed. BlackRock CEO Larry Fink warned of a, quote, real downturn, end quote, developing across multiple sectors and noted a clear decline in consumer activity. quote, "The market is impacting Main Street," end quote, he said at a CEO gathering in New York yesterday, Monday. Fink added that the inflationary pressures from tariffs could constrain the Federal Reserve's ability to cut interest rates, contrary to current market bets that predict up to 5 rate cuts this year. Prominent hedge fund managers are also sounding the alarm. Bill Ackman, who has traditionally been a Trump ally, warned of a, quote, "self-induced economic nuclear winter," end quote, while Bose Weinstein said, quote, "The avalanche has really just started," end quote. Even Jamie Dimon, CEO of JP Morgan Chase, issued a dire warning saying the situation, quote, "may be disastrous in the long run," end quote. As for credit markets, Moody's Ratings has raised the probability of corporate defaults, predicting the global default rate could rise to 8% within the next year. Quote, "The uncertainty dial just got turned up to 11, end quote, said David Hamilton, Moody's managing director, adding, quote, "The tariffs announced by the White House are increasing the likelihood of defaults and wider spreads," end quote. Despite mounting criticism and evident market instability, the US president remains defiant. He has dismissed concerns from economists and investors, insisting that the long-term benefits of correcting trade imbalances outweigh the short-term pain. With global growth forecasts now reversed downward and confidence slipping among both businesses and consumers, the stakes are higher than ever. The question now looming over Wall Street, Beijing, and beyond is whether the United States administration's tariff policy will force a breakthrough, or whether the world is hurling toward economic abyss. We are currently living through history. We will continue following this massive story, all the developments as it unfolds every day. If you want to come along for the ride and follow with the most up-to-date news and analysis on these turbulent times, consider subscribing to Market Update, hit the bell notification icon, and you will be. And if you're getting some value from today's episode, don't forget to hit the like button. Next up, after initially signaling strong defiance, the European Union is dialing back elements of its retaliatory tariffs against the United States, exempting bourbon and several other key goods following intense lobbying by member states and industry groups. Initially, the EU had prepared a wide-ranging list of countermeasures worth €26 billion. However, under pressure from countries like France, Italy, and Ireland, keen to protect their alcohol industries, products such as bourbon, wine, and dairy have been removed from the final list. Tariffs of 10 to 25% will still apply to other American exports, including orange juice, poultry, and soybeans, though the latter has been delayed until December following objections from European livestock farmers. The EU Trade Commissioner said the bloc had no interest in, quote, tit-for-tat or penny-for-penny, end quote, retaliation, emphasizing a more measured response. The revised list is expected to be approved by EU governments this week. Germany's Chancellor-in-waiting Friedrich Merz and Economy Minister Robert Habeck both voiced concerns about the broader economic fallout, warning of dramatic consequences for global markets and calling for EU unity. The economy minister criticized member states for prioritizing their own industries, urging solidarity behind the Commission's strategy. Meanwhile, the US president has intensified rhetoric, announcing a new round of 20% tariffs on all European exports and accusing the EU of being formed, quote, to do damage to the United States, end quote, on trade. He also claimed the EU would be forced to buy US energy, predicting it would slash the trade deficit by $350 billion. The European drinks sector welcomed the exemption of bourbon, citing major risks to exports, especially for France, where losses from tariffs could reach €800 million. As tensions grow, calls for diplomacy and restraint continue on both sides of the Atlantic. Speaking of diplomacy, we move from the Atlantic to the Pacific. The United States is set to begin trade negotiations with Japan, one of Asia's largest economies and one of America's most important allies in the region. U.S. Treasury Secretary Scott Bessent announced on X that he and Trade Representative Greer have been directed by President Trump to initiate talks with Japanese Prime Minister Shigeru Ishiba and his cabinet. Quote, Japan remains among America's closest allies, end quote, Bessent wrote, adding, quote, I look forward to our upcoming productive engagement regarding tariffs, non-tariff trade barriers, currency issues, and government subsidies, end quote. The decision to have the Treasury Secretary lead the negotiations rather than solely the Office of U.S. Trade Representative hints at Washington's focus on currency concerns. particularly the weak yen, which US officials argue gives Japan an unfair trade advantage. Earlier on Monday, Trump and Shiba spoke by phone, agreeing to appoint top cabinet officials to handle the sensitive talks. Ishiba voiced strong concern over Trump's newly announced 24% tariff, warning it would damage Japanese firms' ability to invest in the United States. He urged a, quote, comprehensive approach, end quote, to cooperation, focusing on mutual benefit rather than punitive measures. Trump responded by praising Ishiba's move to send, quote, a top team, end quote, for negotiations, though he maintained Japan has, quote, treated the US very poorly, end quote, on trade, particularly regarding American car imports. Japan has already been hit with US tariffs on steel, aluminium, and autos. As markets reacted negatively, Ishiba described the situation as a, quote, national crisis, end quote, emphasizing the need to protect the broader US-Japan security and economic alliance. The market was happy with the news. After being smashed on Monday when trading opened on Tuesday morning local time, Japan's Nikkei 225 jumped 6%. Meanwhile, in an Oval Office meeting yesterday, Israeli Prime Minister Benjamin Netanyahu pledged to eliminate Israel's trade deficit with the United States, declaring, quote, we intend to do it very quickly. We think it's the right thing to do, end quote. Speaking alongside US President Donald Trump, Netanyahu also promised to remove what he called unnecessary trade barriers between the two countries. Trump welcomed the move, noting he and Netanyahu had, quote, great discussions, end quote, on trade. The Israeli leader's remarks appeared to signal broad agreement with US demands, with Netanyahu stating, quote, Israel can serve as a model for other countries who ought to do the same, end quote. The two leaders revealed that discussions were underway to establish a completely new trade agreement. When asked about potential reductions to the newly imposed 17% tariffs on Israeli goods, Trump was non-committal, replying, quote, maybe not, end quote, and emphasizing that the US provides substantial military and security support to Israel. Okay, that is today's episode of Market Update. Thank you so much, everybody, for watching. We will have another big episode tomorrow, so make sure you're subscribed to get recommended this when it's released. Thank you again for watching. Have a good Tuesday, and I will see you all tomorrow.